Is Indonesia getting poorer? Imagine waking up one day and discovering that your money suddenly buys less. That iPhone you wanted, more expensive. Your trip overseas, more expensive. Even the bowl of chicken noodles from your favorite neighborhood street vendor can gradually become more expensive. And as headlines begin talking about record lows and market panic, one question starts appearing everywhere. Is Indonesia getting poorer? Because in recent years, the Indonesian Rupiah has continued to weaken against the US dollar. And for many people, a falling currency feels like a sign that something is seriously wrong. But what if that's not the whole story? Because the real reason behind Indonesia's weakening currency reveals something much bigger. Something that affects not just Indonesia, but the entire world. To understand what's happening to the rupiah, we first need to understand the world's most powerful currency, the US dollar. Almost everything in the global economy revolves around it. Oil, trade, debt, international finance. For decades, the dollar has been the world's safe haven. Whenever uncertainty rises, investors tend to do the same thing. They buy dollars, which means money flows into America and away from many developing countries, including Indonesia. But here's the important part. Indonesia isn't alone. Japan's yen has weakened. South Korea's won has weakened. India's rupee has faced pressure. Even major economies around the world have struggled against the strength of the US dollar. In other words, the story isn't just about Indonesia. It's about the incredible power of the dollar itself. But if everyone is facing the same challenge, why is the rupiah particularly vulnerable? The answer comes down to three things. First, Indonesia still imports enormous amounts of energy. Despite being rich in natural resources, Indonesia imports significant amounts of oil. And oil is bought in US dollars, which means every time oil prices rise, Indonesia needs even more dollars, creating additional pressure on the rupiah. Second, foreign investors. Indonesia relies heavily on foreign capital. And when investors become nervous, they often withdraw their money. They sell Indonesian assets, convert rupiah into dollars, and move elsewhere, putting even more pressure on the currency. And third, interest rates. Higher interest rates in the United States make American assets more attractive. Why take risk in emerging markets when US government bonds suddenly offer attractive return? As money leaves Indonesia and flows into the United States, the dollar becomes stronger and the rupiah becomes weaker. But global forces only tell part of the story, because markets don't just react to economics. They react to confidence. Investors want stability, predictability, and confidence in a country's long-term direction. Because currencies are not just reflections of economic fundamentals, they're also reflections of trust. Currency movements may sound like something only economists care about, but they affect everyone. Imported electronics become more expensive. Travel abroad becomes more expensive. Businesses that depend on imported materials face higher costs. And perhaps the most frustrating part is that it rarely happens all at once. Instead, it shows up quietly. A slightly more expensive grocery bill, higher transportation costs, rising delivery fees, little things that most people barely notice at first, until one day they do. Because when fuel becomes more expensive, transportation becomes more expensive, distribution becomes more expensive, and over time, businesses often pass those higher costs on to consumers. Over time, a weaker currency can reduce purchasing power as imported goods and production costs becomes more expensive. And that's why people pay attention whenever the exchange rate starts making headlines. Because currency isn't just numbers on a screen, it's purchasing power. And purchasing power affects everyone. But here's where things get interesting. Most people assume a weak currency means a weak country. History tells a very different story. Japan experienced periods with a relatively weak yen. South Korea did too. China's rise wasn't built on having a strong currency. In fact, many export-driven economies benefited from currencies that made their products cheaper and more competitive. A weaker currency can attract tourists, boost exports, and encourage domestic production, which means a weak currency is not automatically a disaster. The real problem isn't having a weak currency. The real problem is being dependent on imports. Because if a country imports everything, a weak currency becomes painful. But if a country produces and exports more, a weaker currency can actually become an advantage. And this brings us to Indonesia's biggest challenge, and perhaps its biggest opportunity. Because the goal shouldn't be to simply strengthen the rupiah. Currencies rise and fall. That is normal. The real goal is to build an economy so productive that demand for the rupiah naturally increases. More manufacturing, more technology, more downstream industries, more tourism, more exports, more value-added businesses, less dependence on imported energy, less dependence on foreign capital, because countries don't become rich by defending their currencies, they become rich by creating industries that the world wants. And Indonesia possesses something few countries have: a young population, strategic geography, abundant natural resources, and one of the largest domestic markets on earth, which means the opportunity is enormous if the country can convert those advantages into productivity. It's easy to panic when currencies fall, but history offers a different perspective. Indonesia survived the Asian financial crisis. It survived the global financial crisis. It survived COVID. And despite these setbacks, the country continued to grow over the long run. Because while exchange rates fluctuate, fundamentals matter more. Indonesia remains one of the world's largest economies. Its population continues to grow. Its middle class continues to expand, and its strategic importance in the global economy is increasing, which means the story of Indonesia is far bigger than the story of the rupiah. So, is Indonesia getting poorer? Not necessarily. Yes, the rupiah has weakened, and yes, that creates real challenges. But a weaker currency does not necessarily mean a weaker nation, because strong economies don't emerge from strong currencies. Strong currencies emerge from strong economies. And perhaps the most important question isn't whether Indonesia can save the rupiah, but whether Indonesia can build an economy so productive that the world wants to own rupiah in the first place. Because in the end, currencies follow strength, not the other way around. Indonesia's future will not be decided by exchange rates, it will be decided by what the country builds.